2 people showing up right now, and that number continues to increase. Do me a favor, if you can all hear me, you have a box down at the bottom where it says type message here, and just let me know that you can hear me and everything seems to be working on your end if you could. Oh, here they come. All right, Kurt, Chris, Eric, Don, Ivan. Yeah, okay. I love the internet. Where else can you talk to 500 people? Well, basically sitting in your home office, which is where I'm at now. Looking out at a beautiful day here in Southern California, about 72 degrees. I was out running this morning to get going on my trading, which I do every morning. I go out and run at about 5 a.m. and watched a moon set over the Santa Monica Mountains over Malibu this morning that I thought was a good omen for the trading day. So it's now 8 a.m. So I'm assuming that we have everybody here. I'm going to give it another minute and just see how many more people come in. In the meantime, those of you who are already listening, you can hear me blather on about how I start my trading day. I get up at 4 o'clock in the morning. I go through all the news. I have Bloomberg is one of my favorite systems to use for news. I don't have it up on this particular PC. Right now it's running on my laptop. So when I'm working at home, I actually have a 2-monitor setup. And I use a laptop so I can roam around the house or go out into the backyard if I want to. I mean, you don't really need to be with your face in the monitor all day long, worrying about every little wiggle in the market. I think that is not helpful. And so I think having a laptop and just looking at a few things is helpful. I know that when I used to work with Bill O'Neill, he would have one screen, one monitor screen with about 20 quotes on it, 3 index quotes and maybe 15 or so stock quotes, and they would all be in huge type, maybe an 1.5 inches high on his screen. And his whole take was that you didn't really need to look at so much. You only needed to know which were the big stocks, and he was very good at picking that out and just focusing on those. And so what I try to do is I try to look at as little as possible. You can see my e-signal here, and it's 8:01:52, and it looks like just about everybody is showing up here. If others trickle in later, then that will just have to suffice. But you can see here I use e-signal, which is one system I use. Now this is what I call my noisy setup. Things that are up are green and things that are down are red. One of the problems with this is that when there's a lot of red, it can alarm you. Colors can cause psychological reactions sometimes that I think, oh, I know what I got to do. Sorry, everybody. I didn't click my show my screen. Can everybody see my screen now? Type in yes. There we go. Okay, everybody can see it. Okay, now you can see what my setup is, and this is what I call my high alarm setup. Things that go up are green, things that go down are red, and this can throw you for a loop sometimes. Especially when you see everything going down, it can cause you to panic out of things. So I have another couple of setups that are blue, oriented towards different shades of blue and green, which let me tell you is much more calming and much more conducive to intelligent trading in my view. And we try not to get hung up on day-to-day movements. Okay, so what's the story of the day today is really Apple. And here we have the chart of Apple. Everybody can see that. Hopefully I'm going to make it a little bit bigger. And so you can see the breakdown occurred in Germany overnight. I heard that it was trading down 7%, down at 322. But let's stop and think about this for a little while. Anybody who knows anything about pancreatic cancer knows that it has a very low survivability rate. So if Steve Jobs has pancreatic cancer, how long is he going to live? Well, unfortunately, I hate to say, probably not much longer. So this could be when he leaves Apple, and I can hear Dr. K and Billy crying in the background there. But he's a brilliant guy, but it's really sad that he has pancreatic cancer. But I think that investors, for the most part, particularly institutional investors, know this. Okay, so if you own the stock, you need to consider that there are going to be periods where you have some news like this, and it's going to knock the stock down. But when something gets knocked down 7% on news, that's not a problem. And unless you saw it break down, serious breakdown through the 50-day, which is this blue line here, and not find any support, which it's getting today, then you could be concerned. Apple comes out with earnings after the close, and we'll see what happens there. I don't own Apple. Dr. K, do you own Apple?
No.
No, he doesn't own Apple. Billy, you don't own Apple, do you?
No, I do not.
Yeah. Bill Griffiths, my trader, our trader, director of operations, and Chris, Dr. K, is over here. So we don't own it. One of the reasons I haven't owned it is because of this. Although we did get this sort of pocket pivot breakout right here, and the stock has moved higher since. So this is a nice yank back to the breakout point. In my view, if you were able to pick up shares below 330, it's probably worth the trade, and so far Apple seems to be holding on. If you own the stock, I think you can hold it into earnings as long as your position is measured or you have a sufficient cushion, okay? If you are running a very tight cushion and you're running a very large position, say 20 or 30, 40, 50%, as I might if I were playing the stock, then you have to consider what your risk is. Therefore, if you have a 10% position in Apple and it drops 20%, that's going to affect your portfolio 2%. To me, that's well within the range of risk parameters that I like to use. And so you need to think of it in those terms, okay? So my view is the big story of the day is Apple, not really a story to me. And I would look for a comeback or anything pulling back in the tech area because of this, I think would be viable. Okay, now let's look at where we are in the market. Everybody's getting nervous about the market. Let's see here. Let's go to my, let's just see some S&P 500 chart here. And everybody had seen what, you know, whoops, how do we draw a line here? Use a pencil. Maybe not. Whoops, everybody had seen this, yeah, I'm good at this. Everybody sees this ascending wedge. You know, and everybody, I had a lot of questions about it. And my view of an ascending wedge pattern is it's only bearish until you see it break down, and even then it may just be telling you that you're going into a consolidation. To base projections of where the market's going on a pattern, based on a pattern like this, I think is silly. And what happens is when it breaks out through the top, the ascending wedge turns into an ascending wedgie. And I know people are trying to go short seeing this ascending wedge, and they come in and start shorting the market willy-nilly. But the market hasn't broken down, and until you see the market break down on severe volume, I don't think you're looking at a top. That's the first thing I look for, and of course then I watch leading stocks. If they start to break down, then maybe you have a broader problem. But when the market tops, more often than not, you will see a major volume break off the peak, and that is where you'll start to see the problem. You can see here, let me get rid of these things. You can see up here that you have these very sharp breaks off the peak. And you see there's time to get out if you need to get out. You don't need to be anticipating these. But the market will break off the peak and then it will break down. And so you can actually wait for this to happen rather than trying to anticipate when it's going to happen. Okay? So we can get out of that idea that you need to know what the market's going to do before it actually does what it's going to do. And if I can get rid of all these I don't know how now, but I'm stuck here. Let's go and look at, I think one of the drivers for the market right now, today you're seeing stuff stocks rallying. And you notice here you have the Dow, not the Dow, the US dollar index is breaking down in here, and you're coming down. Now you could break support. If you break support and you head lower, then I'd be looking for commodities to continue higher, and I'd be looking for stuff stocks to continue higher, and I would also be looking for bonds to actually continue lower. So bonds have been having some trouble lately. Sorry, let's see the TLT. And you can see that the bonds are making 20-year Treasury index, the iShares Barclays 20-plus year Treasury index is here down around support. Looks like it wants to break lower. I think if you see all these things going on, then the market is probably going to go higher. It may not do it in a straight line, but it is probably going to go higher. Okay, let's take a look at my favorite commodity right now, silver. And this is very similar to gold. Now, if we look at silver here, every time it's gone up, it's consolidated for just a couple of weeks, runs up, consolidates for a couple of weeks, runs up again, consolidates for a couple of weeks. Now, finally, here you're breaking down. You've gone through the 20-day moving average and actually violated it for the first time since the stock, or since the ETF, rather, broke out way down here. And you may recall we identified this back then. And I was even on Fox Business News right around here on September 23rd telling them to buy silver. And, of course, I was being poo-pooed by Liz Clayman, although I love Liz. But she was poo-pooing my silver pick. Why? Because she claimed it was making a 30-year high. Well, come on, Liz. If something's going to make a 40-year high, what does it have to do first? It has to make a 30-year high. And if it's going to make a 50-year high, it's got to make a 40-year high. So I don't quite understand the logic of poo-pooing something simply because it's making a new high over a longer period of time, like say 30 years. I think that's very constructive. So let's be realistic about silver and let's be realistic about gold. They probably need to base for a while. If we look at, say, gold over the last year or so, okay, you know, it's had its moves and it's spent some time consolidating, runs up here, you know, here's a big consolidation in here way back when in, I hate this thing. How do I get rid of this thing? Hey, Billy, you know how to get rid of this thing? Click
Trying
on
to get
another
rid
one.
of the trend line.
I want to get rid of this trend line. How do I do that?
Click on it, right-click, and then remove.
Oh, thank you. Someday I'll learn how. No, not working.
Click on it, right-click.
Close?
No,
still
that
doing
box shouldn't. Just click on it and then right-click it, and it should bring up another box saying close.
Now, how do I get rid of this pencil?
Up at the
All
top
right,
there,
I'm not going to worry
you see your
about
little,
it.
you see the little X
Right
next
here,
to the pencil.
right? I should be able to click this, and this thing should
No,
shut
click
down,
the
right?
click the X next to
There.
it. Yes.
That one? So I just
Yep.
did it. Okay. Oh, now I got it. Thank you, Billy. Now you know why I keep Bill around. He just keeps me on track with all these silly little details that I get caught up in. But anyways, as I was saying, if you look at gold, you know, it's had long periods of consolidation, and so here it's actually trying to work its way out of a consolidation currently, and so it's entitled to do some work, you know. And when everybody loves gold, I don't think that's when you want to buy it. You want to buy it when everybody hates it. So I think they're entitled to these consolidations, and I think that the dollar moving lower, as we see over here, potentially this is going to probably drive these higher. So let me go to a template that I use for a Neil Clean daily chart. I'm going to get rid of these because these confuse everybody. These are just on here. A friend of ours, Mike Scott, created those for me, and I don't really use them, but I do like using it up 12 out of 15 days in a row. But let's look at some of these stocks today. I own AGU, and I think these look fine. You had a little pocket pivot right here. You can see the volume picking up. So this actually Bible off the 10-day, and even Bible right here. So we actually own this one, or I own this one rather. And this looks pretty good. The strongest one in the group right now seems to be MOS and CF. And of course I don't own those, but they're also showing strength. But I think the whole group will move higher. And something to think about when it comes to agricultural stocks and when it comes to fertilizer stocks. Before 2006, 2007, I don't know about you guys, but I didn't even know what the hell a fertilizer stock was. I hadn't heard of stocks like Dry Ships. I hadn't heard of stocks of Mosaic, CF, you know, any of those shipping stuff stocks. I didn't know anything about any of those, and I never even heard of them. All I knew were tech stocks, and that's all you ever wanted to own, right? Tech stocks or consumer stocks, you know, Amazons and Yahoos and stuff like that. Strong retailers like Deckers, you know, or Chipotle Mexican Grill. Back in that period, you didn't really think about it. I kind of missed that at the beginning. But those stocks all were leaders in the 2006 to 2007 bull phase. And so they exhibited leadership. Now, what do we know about leading groups? Generally, a group will lead in a bull market cycle generally 2 to 3 cycles in a row. Okay? So you'll see, you know, we can go back, for example, I'm going to show you. If you look at, say, a stock like Cisco, then I'm going to try to turn this into a weekly chart. Pay no attention to the moving averages. But if you look at Cisco, you know, you can go back and see that it has actually, let's actually change this into a monthly chart. Wow, doesn't that look pretty? Here's 2000. But if we go back, you know, you can see Cisco came public in 91, was leading, then corrected severely, then came back and led again. And now it's topped out, and it is still a long ways from its top. But you can see that it basically led through 2 cycles. So what we know is a leading stock will tend to lead through 2 to 3 cycles. So when I look at these fertilizers like AGU, MOS, even things like some of the other stuff stocks, CLF is one we like, FCX, another one that looks pretty good. We'll go back to a daily chart here. And I hope I'm not going too fast. If I am, shoot me some IMs over here. But I think these stocks could lead again. So I think if the market continues higher, this is definitely a group that you want to be in. And I believe it will go higher along with stocks like Caterpillar, which we bought this morning. Coming right off this real tight formation here. It's like 4 weeks tight. Right now you're running volume that is I'm using Wanda over here, is up 113% above average for this time of the day. So this is coming out here. To me, this looks like you're going to get a pocket pivot. So you probably see a PPR, or a pocket pivot review, come out sometime in the next hour or so after we get off of here. So I think you're going to see these work pretty well. You might probably will see things like BUCY being bought out. So that tells you that this is an area of importance right now. And again, when we had these stuff stocks leading in 2006, 2007, and then they all actually held up pretty well going into 2008. They were trying to continue rallying. I think you'll see this area continue higher, and I think this is an area of emphasis that I think you want to be involved in. It's not going to be without volatility, because commodities-oriented stocks are often very volatile, as are the commodities themselves. I mean, you want to look at something volatile. This is I think this is an ETF that invests in corn and cotton and some agricultural items, and you can see this is pretty volatile. But my guess is you'll see this thing go higher. Softs, I guess, soft commodities, which include things like corn and cotton. Wheat, I think, also is involved with this one. But you can see it's very powerful. So I think this is an area you have to be in. But you have to remember you're going to experience some volatility. Some of the stocks we've been talking about recently, let's talk about Lulu. One thing I think is very foolish is for a hedge fund manager to go on either CNBC or Fox Business News or any of those channels, or on Barron's, and start talking about how they're short this and they're short that, and they're going to give you 500 reasons why. I myself am not a graduate of the University of I Am Smarter Than the Market. I'm actually a graduate of the University of I Am Dumber Than the Market. So I don't operate on the basis that I know that something is too high or that the PE is too high. You see Barron's coming in today talking about some stock having a PE that's too high. And of course, Barron's is perennially wrong because they base everything on PEs. When you look at Lulu, the PE hasn't expanded terribly. They're still growing, and I'm going to guess they'll fill this gap, and it may come out. I tried buying a little bit in here. It didn't really work out, but I trade aggressively, so I'll dump it and watch it, see if it comes in. So around 71 today, we were kind of unloading it. Right, Billy? He probably went to sleep.
Yeah, right there.
It's pulling back to the 20K. Yeah,
Had you
so
on mute, sorry.
it might be viable here, kind of watching it here, but it may just come back a little further and fill the gap. But this is a nice viable gap up. The only problem with this viable gap up, and it's one of the reasons why when you buy one of these, if it's clearing out to new highs, it will generally hold the low if it's powerful. But see, the problem here is you have a little bit of overhead on the left side. So what's going to happen here is it's going to run up, and it's gapping up, but it runs into a little selling, and if it doesn't start taking off real quick, some of these and start dumping stock, and it'll pull back a little bit more and it'll violate it. So I think when you're playing a gap up like this, and Dr. K, you can chime in here if you think I'm way off track, I think you can give it a little bit of room here and maybe figure it's going to hold the bottom of the gap. What do you say, Dr. K?
Yeah, well, generally speaking, as we talked about, in the book, it's you want to give it a little porosity. In other words, if it breaks the low of the gap up low, you don't want to just automatically sell it. You want to give it a little bit of room, maybe 1% or 2% under that low. And you want to just judge it in context with what the overall market is doing. I mean, there's some excellent gap ups that might feel headwind, especially if the market's weak for a couple days. And you want to give those maybe 2% or 3% to the downside, and then judge accordingly.
Thank you for that. Now, here's the stock. We got some questions on this. And you got to remember these crazy little Chinese stocks that are IPOs, they're going to be very volatile. We got one question, and with apologies to the gentleman who asked me that question earlier, he asked me what my opinion was about this move on Friday. And of course, the stock comes straight up from 26 just about all the way up to 36. So this comes up like nearly 25-30% in just a matter of a week or so. So it's entitled to pull back as it comes out to new highs, and a logical place for that to happen is up here. I would actually look for this thing to form a handle if it's sound. Today it got downgraded by a few people, and I guess a couple of firms downgraded. I don't really pay attention to all that stuff. I just watch the price volume action. But it looks to me right now as if you're probably looking at, 74% increase in volume. But this is volatile. So remember, that's what you're playing. We mentioned this right around here on this day. One of the reasons we didn't mention it here is because it had stalled a little bit, and then the next morning we see it coming up off the 10-day. As soon as it clears that, that's when we're sending out an email on it. It looked good right there. I played it myself up into here and made some pretty good money real quick, but I'm playing a pretty good sized position. It's reasonably liquid, but it is volatile, and if you watch it intraday, it's going to cause you to get dizzy. So, this is very normal action. I like the story long term, and I like the fact that people are coming out and panning it because I think there is potential here that's based on the dynamism of the Chinese economy and the consumer. If they are, in fact, the Amazon of China, then that'll become evident over time. So just watch how this is acting. If you're in the stock and you're seeing it run up like that, 10, 15, 20% very quickly, you really have to think about taking some profits. Another stock that I like is Chinese
stock before you get onto the next one.
Oh, okay. Sure. Go ahead.
What's interesting about the stock is that if we all remember, Amazon back in the late 90s had no earnings for the first few years, and yet it kept going higher and higher. In fact, I mean, it was a huge leading stock of the late 90s. But with no earnings. Now, Dang, on the other hand, has earnings, and it's got 6 million active customers in 2009. And, of course, in 2010, that number grew appreciably. So this stock is a potentially huge leading stock, but keep in mind that IPOs tend to be a lot more volatile, especially ones that that pose so much potential. So my advice to people who bought it correctly on the pocket pivot is if you have a longer-term horizon, you can sit with this kind of volatility, and it probably will pay off very handsomely. Of course, have your sell stops in. I still have a small position in this. I bought it on the pocket pivot, sold some for profit, but I've kept the core position. So my plan is to trade around this core position on this volatility. Of course, if it were to break down through, say, the 10-day, then I wouldn't ask questions, and I'd probably get rid of the whole thing because something's wrong. But right now,
so the 10-day is at 29.82 currently. Real men use pink moving averages. I just want to point that out. I have one comment from one of our attendees, Dr. Jeffrey is all I can pick up here, who is an oncologist, and he makes a good point about the pancreatic cancer, that there are several different types. And he says here that as an oncologist, I would point out there are various types of pancreatic cancer, some with different prognosis. The fact that he, Steve Jobs, has survived as long as he has means that he likely has another variant. Well, that's good to hear for Steve Jobs, so maybe that's not so bad, and maybe that's why people are picking up Apple, and you can see Apple coming up off its lows in real time over here on the left of my screen and moving back up. So in hindsight, I may regret not buying any shares, but I'm okay with what I own as it is, so I'm fine. But we want to go, somebody asked about CCME, which I think is another stock that interests me in the China realm. CCME came in. These guys actually put advertising up on buses in China, and buses, I guess, are everywhere. Some 25,000 buses or something like that, with the expectation it'll get to 35,000 in the next year or two. But the big thing for them now is they're going onto the web and they're using their website as advertising. So I think any of these consumer-oriented type plays on the internet in China remain strong plays. And so this one actually showed a stalling pocket pivot down here. One thing I can do is bring in my little crosshairs, which I should have had before. But you can see right in here you had a pocket pivot. It stalls a little bit. It pulls back down for a couple of days, finds support off the 10-day, the pink moving average, and the 20-day, which is the green one. Then we get another pocket pivot there. I bought a little of the stock, then it runs up to 2021. Now, if you own the stock, you bought it down here, it's logical if you have a heavy position like I would play it, you would sell some of it, because now here it comes in, and that's logical. You're going to run into some overhead here. You have a cup and you have a handle. My feeling is this stock is probably going to be buyable as it comes down into here, but it's volatile again. I like this story. I think long term these guys could do very well, and so I'm keeping an eye on this stock. I like the fact that it's closer to $20 now instead of 10. That's always a good sign. But this is a very interesting situation, and as far as I'm concerned, let's see if I get this right. Is this the right one, Dr. K, for the Chinese market, or is it FXI? It's FXI.
FXI.
Yeah,
FXI.
so this is the FXI. So this is the Chinese market, and the Chinese market's trying to come around. It's corrected off its peak, but everybody knows that China's in a bubble, okay? And you know, when it comes to bubbles, just like everybody knows gold is in a bubble, when a bubble happens, the crowd doesn't know you're in a bubble, and the crowd doesn't pick out the bubble. The crowd is long and strong right into the bubble, and when it pops, the crowd gets slaughtered, just like in March of 2000. So I don't really see that you're going to get a bubble in China, particularly when you look at just long-term growth rates in the way they're actually. I think fiscally, for a communist government, they do okay so far. Of course, not everything is transparent there. there are some holes in the system, of course. We have friends in China. In fact, our webmaster, Ramen, is based in China, believe it or not. So we truly are a global firm. I'm in LA. Bill Griffith, my trader, is up in San Ramon, which is the East Bay, East San Francisco Bay. Dr. K is in London, and Ramen, our webmaster, is in some obscure city in, is he near Dalian or something like that in China? But
Yeah.
we all work together. We're in the same room. And right now, Dr. K is coming to you from London. I'm coming to you from LA. But anyways, to dispense with the babbling, you know, I think Baidu is going higher. Okay, I know that the CFO or somebody came out and said that growth rates are going to slow. Well, okay, maybe they are. And the stock broke down. I thought it was a short here. I actually did make a little money, but you can see how it came to these lows here, undercut, and then turns back up. And of course, everybody's trying to get short the stock in here. And I thought it might be a short, but see what's happening here is you're getting these pocket pivots. These are pocket pivots coming back up through the 50-day. And this pattern is one that I've actually, as I like to joke, to kind of parody my old mentor, we've measured it and studied it and categorized it. And I call this one an udder, U-D-D-E-R, like a cow's udder, because a leading stock sometimes gets hit with some news. And when you think about it, you know, you're doing a little bit of wedging here along the lows. You're doing a little bit of wedging here as you're trying to come out. So it's kind of entitled, especially after all this movement, it's kind of entitled to pull back and backfill a little bit. And so I think with this udder coming, it's a nice shakeout, but you notice here along the lows as you come down for the second time, you're not really getting a lot of selling down here. It's well below average. This is your 50-day moving average of volume, this little red line here. And then you see the volume pick up. It may move sideways a little bit. My guess is Baidu continues higher. And I don't think you're going to see Baidu top and institutions just dump the stock and start exiting their positions unless we get into a serious bear market. And so far, as I pointed out earlier, that hasn't happened. So, you know, I'm not going to sit here and try and anticipate a bear market. If I want to get paranoid, I can find a lot of other things to get paranoid about, the least of which right now is going to be trying to anticipate a top, okay? But you look at other, let's go back to stuff stocks. I've liked Vale. It's not Vale. It's like, I know all you gringos out there got to say Vale, but it's Vale, okay? Which means value, actually. And in Spanish or in Mexican slang, we have a saying, no vale madre, which is you're not worth your mother, or colloquially, you're worthless. So I know that term pretty well. But in any case, in Vale, you can see the volatility inherent in a stuff stock. But I like the fundamentals here. We picked this one up as a pocket pivot way back here. And this is the beauty of a pocket pivot, especially when you're dealing with stuff stocks, which are very volatile. You're able to find a nice low-risk entry point that isn't very obvious, and it isn't in a position where it's very extended. You can see when these things get a little extended, they can yank back. So I like this stock. I think it probably continues higher. I wrote at the end of 2010 that it's one of my stocks for 2011. I think will continue higher. Now, the big boy in the stuff stocks, particularly with respect to copper, is Freeport-McMoRan Copper and Gold. And, of course, this thing has been a charmer. I remember guys emailing me telling me this was a short at 90 because it was a pod. I'm not going to confuse you with that, but you could read about it in the book Trade Like an O'Neill Disciple, where I talk about some of the new short selling patterns that I've come up with since leaving O'Neill in 2005. I think FCX continues higher. There's no real buy points right now. So if you own it, you're just hanging out. I did notice today we saw Southern Copper Corp starting to flash. Well, it had some volume on a gap up. It is holding its 50-day. This one may continue higher. I believe Dr. K Rio is another copper play, is it not?
Rio is actually involved with copper, aluminum, iron ore, energy, diamonds, minerals, all sorts of stuff-based products. And it's Big Daddy. It's a $35 billion company, and it's certainly a good metric for commodities.
So if we're bullish on commodities, then this would also be a stock to look at.
That's right.
Okay, now let's go to one of my favorite areas, and everybody tells me I have my head in the clouds.
Actually, if you look at BHP, there's some of the other big ones as well, like BHP Billiton, BHP, that mirrors Rio, and BHP is a $153 billion juggernaut. So you know, you can look at a weekly chart of BHP and put it overlay it on top of Rio, and you can see that they mirror each other quite well.
So I've got a lot of questions here. I'm going to try to get through some of them. So BHP Billiton looks good, but all these stocks, I mean, you've even seen oil stocks, and I've liked Contra Resources for a while since it was back down here. There's another one that I'm trying to remember. Not CLR. CLR is what I think it is. Yeah, Continental Resources.
Yeah, that was a huge winning oil stock in the last cycle.
Right. Okay, let's go to clouds. Cloud stocks. My favorite is F5. F5 is going to announce earnings, I believe, on Thursday. Now, we actually own this one, and our position is scaled, about 20%. So if the stock gets hit 10%, we're going to lose 2%. If it gets hit 20%, we're going to lose 4%. For us, that's a yawner. So we're not worried about it. We own it lower on these pocket pivots coming up through here, and I believe that we did tell everyone about those. So if you own it, you have a little position. Going into earnings, I would keep it to 10 to 20%. Okay, it may yank back, and something could happen, but my target on F5 is around 200 bucks. So if it doesn't get there sooner, it's probably going to get there later. I think that it's still a strong story. So we would stay there. Another one we own is CRM, and this is actually acting fine too. And they're coming out with earnings, I believe. Well, not till the end of February, and this is acting well too. So I think you had a little pocket pivot right here the other day.
Some of these stocks will give clues before they report earnings, the day before. Sometimes there's information leaks, so you can sometimes use that to your benefit and spot buying opportunities or pyramiding opportunities in the name. Should the volume work to your advantage. And of course, the opposite is true as well. If the stock doesn't behave well, such as CRM or F5 the day before earnings, I would probably blow out the whole position.
Now the other one here is VMware, and I consider F5, CRM, Salesforce, and VMware to be the three, like the power trio of the cloud computing space. And this continues to act well. Somebody asked us why we bought it in the follow the stock portfolio simulator here. And it's because you had a 3-week type breakout, and the volume was above average. It wasn't huge, but it was enough for us to get excited about the stock right there. So we actually own it right about 90, and it looks okay. We own it in the portfolio. We also have it on the portfolio simulator. And I want to remind you all that the follow the stock portfolio simulator, it's not representing what we do. What we've done is just take a very simple, methodical approach to building a portfolio using O'Neill style investing, and so that's really what it's intended to do. I think you could follow along with it. It's only about 56.75% invested right now, so it's moving along pretty nice. It's up a few percent. I actually have started running a $15,000 little part of my IRA just to test out how it would work with a small portfolio, so that anybody who's just running a little bit of money, which of course, if that's all you have, that's a lot of money to you, can use it. So I think it's useful. But remember, it's not what we're doing in our trading. My trading, particularly, and my trader Billy will tell you, I'm pretty crazy sometimes. I'll go in heavy, and something that I went in very heavy with, and I've been playing around with both ways as RIM. I try buying. I short it down coming in here, and then I buy it back, and I'll go in big. And then I bought it big in here the other day, and it's running up out of here. But I'll go long, 20, 30, 40,000 shares, trying to make some, make a house or two. I try to make a house a day. That's my goal. But anyways, some other questions we have. CMG has come up. Chipotle Mexican Grill. Now, as far as I'm concerned, Mama Morales would not approve of Chipotle Mexican Grill because they use black beans. And where I'm from, where my family's from, I'm actually a third-generation Mexican.
You can get pinto beans there. You can get pintos.
Oh, so they did find. Okay, now I know why I'm long.
The one in London got pintos, and they're really quite good. I'm surprised. You can see why the stock is doing so well.
We call them frijoles. So maybe Mama Morales would give her endorsement, in which case the price target would go to 350. But where I come from, most of my family is from Sonora. There's another, Fuerte is another town along the coast on the Baja, the Bay of whatever it is, Gulf of California or whatever. My relatives there, most of whom are blonde and blue-eyed, believe it or not. We have a large German contingent in my family. I, of course, didn't get any of those genetics. I look like the gardener or somebody who picks vegetables. But I'm okay with that. In fact, that's how I got into the business. I thought they were talking about picking vegetables, and I said, picking stocks? It's got to be just like picking vegetables or fruit. So we got that down. But in any case, CMG, and I can make fun of myself. Oh, look at this. Here we go. Hey, Henry, get off of there.
You can always count on Henry to chime in when he's needed, right?
Yeah, that's Henry Canby that just came on the IM. He used to work with us at O'Neill. Henry actually is another member of the 1,000% Club. In '99, he made 1,000% just like I did in his own account. Now he works down at some day trading firm down in San Diego. So, anyways, Henry, keep the IMs off, will you? Anyways, we got CMG, little pocket pivot off the 10-day. Looks like it's going to run into resistance to the 50-day. It's holding the 50-day. I own the stock. I bought it coming up through here. Not a big position for me, a small position. But I'm giving it some time. It looks okay. And you got everybody trying to come in short on the stock. It looks overvalued. I'm thinking this thing probably is going to continue higher. So I'm not too concerned about it. I think, though, you do want to use this level down here as your ultimate guide for a stop. But up here, I think it should at least hold the 10-day moving average at 225. What do you think, Dr. K?
It looks fine to me. It's a constructive pattern if you look at the price volume on the base that's been traced out, and it came through the 50-day on volume that I'd like to see a little more volume there, but it's still adequate, and I think it's probably going to back and fill a little bit here and then move higher, assuming, of course, the market is higher. And it also has that gap up in October in its favor. I love to see gap ups in patterns, constructive gap ups like the one in October. So that bodes well for the stock.
Okay, let's do, I want to go over some stocks that people are asking. We're not going to be able to get to everything. We can probably go to 9 o'clock because what I did is I screwed up and I didn't record this until maybe about 10 minutes ago. So sorry about that, guys, but we'll put up whatever we can. But, we're just getting started on these. I could do these things, 2 of them a day if I had to. So if there's big demand for it, we want to keep you guys happy. You can tell I'm having a good time doing it, and it's keeping me from watching my stocks wiggle around. And in fact, I saw CMG was down $4 earlier. See, if I had been paying attention, I might have sold it. But this way, I stay on track here. All right, let's look at Ford. Everybody loves Ford. I love Ford. I hate Fords, though. When I was a teenager, I owned a Ford Ranchero, and let me tell you, that had an old Cleveland block, and that thing caused me more grief than anything I've ever owned. However, I did learn a lot about fixing cars. But that thing would ooze oil all the time and overheat, and brakes would go out. I don't know what's up with that. But I think Ford is actually back on track. And I admire Ford because Ford isn't taking taxpayer money, unlike the fraudulent company that they try to pitch as being General Motors, which is not. And I won't get into that. But I know accountants, when they look at the prospectus for General Motors, the first thing they notice at the very beginning of the financials is that the company does not have adequate financial controls. Translation, everything you read here is BS. Okay, so I'm not playing General Motors. Ford, I think, looks fine. You had a very tight little pattern. On the daily chart, this doesn't show up as anything but a very tight, I think, 4 or 5 week pattern here, and it breaks out. Ford is acting fine. You get a little volume up here. Yeah, so what? It runs up, 10, 15%. Yeah, it might come back to the 10-day. Ford looks fine. LVS. Okay, this is one. It's a little bit tricky, too, because it had the pocket pivots, and now it's kind of floundering around here. There was some news the other day regarding, I guess, casinos in Florida, casinos in Illinois, casinos on the moon. I don't know. This is a new one every day. But, okay, it looks okay to me. It's kind of coming up around. But you got to remember, this is going to look like a climax top, but it's kind of early in the move here for this to be a climax top. It's not like LVS has been a big leader for a long period of time. It's only recently run to the upside, and now it's kind of basing out. So it might take a little more time. It's not so fast. Now, we told you about Win off the lows. You had a couple of pocket pivots in here, and I think Dr. K put those out as PPRs, and that thing came right up. See, this is something I think might happen with these other stocks that are coming off the lows, as you might see move up to new highs. But I think this is constructive both for the consumer sector at large as well as the travel sector, and of course, the granddaddy. So just really quickly, let me just say, on this one, I could see a pullback back into 115 or the lows of this area. This might turn out to be a high handle. It's kind of getting ahead of itself here. This is a sharp move, so it's going to need to do a little backing and filling. But if you bought it on any of these pocket pivots, I think you can sit with it. It looks okay to me. But you get into the travel area and you look at Priceline. Well, there's nothing wrong there. And Priceline isn't really that high on a PE basis. It hasn't expanded that much here, so it could go a lot higher. If we go into Amazon, if any of you saw me on Fox Business News, I think on New Year's Eve, I'm talking about how Amazon is probably a non-obvious cloud play. And that's pretty much the biggest part of their business right now in terms of where they're developing. And anybody you know inside Amazon, and if you do, you could throw me a shoot me an IM here. I'm kind of looking to see if anybody does, but that's kind of where they're going. And management has stated that they see revenues from the cloud computing, this EC2 product they have, they see that exceeding their retail revenues. I mean, this is a company that's to make, what, $7.60-something in 2014, and so if they get to a point where those cloud revenues exceed retail revenues, you're looking at a pretty good growth story. And that's why, even though Amazon has been such an overvalued retailer, as everybody likes to tell me, the stock keeps going higher, and you want to know why? That's probably why, the cloud thing. So that's what I like about Amazon.
Yeah, Amazon
what else are you looking at?
Amazon's been really good at positioning themselves in the growing cyberspace arena. I mean, ever since the 90s, they're really smart management, and they see how fast the technological edge of the internet is changing, and they're capitalizing on it with devices like Kindle and EC2. So I wouldn't underestimate their potential here, because also as the internet continues to grow rapid fire, and we still have a couple billion Chinese that have yet to go onto the internet. There's tremendous growth opportunity for companies that position themselves right.
Exactly, and I think another company that has positioned itself very well is Rovi Corp. It used to be known as Macrovision. Rovi, I think, makes it sound a little funkier, like TiVo. I think that's why they did that. But these guys help consumers find content on the internet and help them connect to it. So I've been writing about this as a potential Netflix killer for the last month or so, and only recently, last week, we saw an article, Rovi, the most important company you've never heard of. That came out in some magazine or some website somewhere, and that was kind of driving the stock. But when they came out with the news a week ago Friday, so 2 Fridays ago, they came out with this news, and it struck me as being somewhat bizarre, because it looks to me like what they did is shifted 2011 revenues to 2010. And so when you look at 2010 revenues, they were about 200-something million higher than what was estimated, and 2011 was coming out slightly lower. Now, when you move that much in revenues to 2010 and 2011 doesn't fall that much, I saw that as very positive. So I saw the stock as very viable down here. It's risky, of course, but once it shows the pocket pivot, which is what this is, and of course we did alert you to it, you could have bought the stock right here off the 10-day and you'd be up 10%, which from this point was like 63. So okay, maybe 7-8%. But in any case, you're up. You got the 10-day line below you. The stock, okay, see these little triangles I have here? Whenever those show up, that tells you that the stock is up 12 out of 15 days in a row or better. And when I was at O'Neill, we had a rule on that. We used to call them ants, the ants rule, and that is when a stock does that and shows that it has a pullback, when it breaks out again, you can buy it on that basis. Now notice it's doing it again. It's holding very tight, and I think Rovi is probably going to go higher. I'm going to stick my neck out and say this stock will be over 100 within a year. And if it doesn't get there, you can all email me and give me a bad time. But I own the stock, and I've owned it for a while. I was on not CNBC. I'll never go on CNBC probably because I badmouth them too much. But I was on Fox Business News on this day telling people to buy it. And I thought the stock was going a lot higher on the basis of this shakeout and breakout. I love shakeouts like this and then breakouts, because often what they tell you is that you're just hurling weak hands out of the stock. It's kind of like when you're a little kid and you're in the playground, and those little spinning merry-go-round things in the playground that everybody would be hanging onto the metal bars, and then you'd have the big kid come in and spin it really fast, and all the little kids would go flying off the thing. Well, that's kind of how I look at it. That's what happened here, up here, and then again, before back in September here. So Rovi's had that happen a couple of times, and I think it's just served to bring strong hands in. And I think this volume here, very big volume here after these shakeouts. Institutions are coming in and taking advantage of these pullbacks to load up on the stock, and I think they see the opportunity here. Rovi, basically entertainment from the cloud. And of course, cloud, what is the cloud? The cloud is the new fancy term for the internet. But that's where it's all going. And you can see, you know, what are we doing right now? We're coming out at you from the cloud. You're not all in a room at some hotel, in a conference room where we're giving a presentation, although we will be doing that on February 20th, I believe, 21st, Monday, February 21st in New York at the Marriott Marquis at 1:45 p.m. Eastern. We hope to see some of you there. Should be a fun time. Somebody's asking about Oracle, as long as we're on clouds. Oracle, little couple of pocket pivots here. This looks fine to me. Oracle is the granddaddy of cloud computing. I remember in the 90s, and I actually have a lot of friends who went to go work for Oracle right out of Stanford in the early 80s. They're all millionaires now, and I think they all sit on the beach all day, but they've done very well. But Oracle is a very well-managed company. Larry Ellison is a very sharp guy. He can be arrogant, whatever. I know he used to be a big pothead, which apparently works to his advantage in this case. But we got a couple of pocket pivots, and he is the guy who postulated the network computer, the NC, back in the 90s, where all your applications were going to be on the network and you access them by going online and getting onto them that way. So basically, he was looking at cloud computing long before anybody else was. The only problem is that in the 90s, you didn't have, you know, 41 megabyte upload speeds on your internet service. So he was ahead of his time, and the infrastructure wasn't quite ready. Today, of course, we're seeing that that is not the case. There's plenty of internet capacity and speed to do whatever you want, and so cloud computing is coming into its own. And it's going to be a continued theme. But here's one thing I would point out to you, and that is you need to think of this in terms of what is obvious to the crowd and what is not. So Amazon is not obvious to the crowd. Rovi is not obvious to the crowd, but these are cloud computing stocks, okay? F5, BMW, yeah, those are all the CRM, those are all the clouds that everybody knows about, and they're doing fine. But you got to ask yourself, when you're looking for new opportunities, try to understand which companies are going to be able to take advantage of the cloud, such as Amazon, for example, and whatever existing capabilities they have. How are they going to apply those to the cloud? So you got to have some understanding of what's going on. You know, you have to use some judgment. On Virtue of Selfish Investing, we basically have the various sections, and if you really need to have your hand held and you need to be told, you know, look left, look right, put your left foot in, put your left foot out, you know, do the hokey pokey and spin yourself about, or however that goes, then you should only be sticking to the market direction model, because Dr. K is very specific about when you should buy, when you should sell, when you should go to cash, and so on. When it comes to pocket pivots, pocket pivot review, all we're doing is identifying the pocket pivots. You should always use a minimum stop of 7%, okay? Sometimes you want to use a tighter one, and you can based on the nearest moving average. So, for example, right now I'm long CMG based on the basis of these pocket pivots, but you know, violation of the 50-day, if it gets too far down, might cause me to cut back or lose the position. However, if I'm using a 7% stop, I got about 14, 15 points or more to the downside as a stop. So it actually could blow down here, and still I'd only be down 7-8% on the stock. You could use that. It depends on your preference. I run things very tight. Dr. K, not so tight, but I'm a maniac. I like to trade huge positions, and if I drop 10 or 15 or 20%, that's nothing to me. That's why these morons that I see on the internet, a guy who lost money in my fund and then got mad because we wouldn't reimburse, and goes on the internet and starts slamming me because I dropped 34% shorting. Okay, these people are idiots. They don't understand that risk and reward go hand in hand, and they're so greedy that all they see is that if you made 11,000%, they refuse to take into account that if you make that kind of money, you're going to have to sit through some crap sometimes, and it happens. So my point to you all is that understand yourself, know thyself. So if you can't handle a lot of risk, don't take big positions. If you're the kind of guy who likes to swing it like I do, then you do that. You take big positions, and that's how I run it. You know, I dropped. Go ahead, Dr.
Yeah, I was going to just say, keep in mind that if you, I've gotten a lot of questions on the point of what if you buy the stock late? What if you missed the email, or you're at work and then you see the stock at the end of the end of the day and it's up 4% from where we recommended it? Well, take that into account. That doesn't mean you can't buy it. If it still fits your risk-reward parameters, go ahead and buy it. In other words, if you're buying 4% late, that means instead of a potentially 7% maximum loss in the position, you might have to give it 11% maximum loss, and that may or may not work for your style. Or maybe you buy only a half position since you're buying it late. So there's lots of ways to handle it and to maintain your risk profile, so you're not violating your rules.
Right, and so if you're using any of the other services, the pocket pivot review, the short sales setups, for example, you got to institute your own stops. You know, on short sales, I use 3 to 5%. I run it very tight, and I'll actually come back and try to hit it again if it rallies in my face. But I learned from 2009 that if you sit too long on the short side, you get your head handed to you. And I should have learned from 2002. But you know, there's a guy who wrote a great book, Gold Trading Boot Camp, who said that when he looks at his trading, even as a professional over 20-something years, it's when he looks at periods where he had a slump, he makes the same mistakes, and they look amateurish every time. And I have to admit, you know, I see the same thing as well. So when you feel like you're an idiot and you can't do anything right, I just want you to know I've been there. Dr. K's been there. And my trader Billy has watched me do it a few times, so he can attest to it as well. Let's go through some of these real quick. We talked about Oracle. People ask us about A, not really on my radar screen. Looks good though. I mean, I wish I had bought it at 36 when it had this little breakout here. I don't know. Don't see anything going on. Riverbed we're being asked about here. Riverbed acting fine, holding its 10-day, coming out with earnings pretty soon, but that looks fine. The last place really to buy it was here, I think, on this pocket pivot. So I think we identified that. Let me go through this and pick up a few more. How do you trade ETFs? Cloud computing is not the internet. No, I know that, but it uses the internet. So what I'm saying is using the cloud. The cloud is really the internet. It's being able to access things through a network. So that's how I look at it. But I guess it's all semantics, really. We all understand what the concepts are. Google. I actually wrote over the weekend that Google is probably going to be a surprise stock. Why? Because this thing bores me to tears, okay? 63 relative strength. But you know what? Google is a cloud play, as is Apple. Apple is obviously a cloud type of play. I mean, they make appliances to access the internet. I think Google, well, today, they're probably benefiting from the news about Apple. But the bottom line is whether Steve Jobs is around or not, you're seeing the Android system is very powerful. In fact, Dr. K told me yesterday that when he switches phones, he's getting rid of his iPhone. He's going to buy an Android-based phone. Now, I sit back, and I still have a BlackBerry. And I'm just waiting to find out from Dr. K which is the best one to use. So I'll probably be switching to an Android-based phone as well. But you can see Google's been flashing these little pocket pivots in here, right around here, around 600, and then again here, and again here, and again here. These are all pocket pivot volume signatures. In other words, the highest volume over the last 10 days compared to any down volume day. You can have a higher up volume day, but you can't have a higher down volume day. And you'll notice there aren't any down here. Here, let's make this volume really kick up. You can see there aren't any really in here over the last 1, 2, 3, 4, 5. So here you get one right here, and you get one right here, and again right here. Now look at the stock today is moving higher. And the other thing I like about Google here, and we actually wrote a Market Watch article, and I got to tell you, when we wrote it, I was very skeptical, but I went ahead and wrote it anyways. You look at Google, it's coming out of this long-term pattern here. This is a weekly chart going back to 2008 right here. But you can see here's this big cup with a handle. You have a nice shakeout here, and it's starting to come out the top here. So Google may surprise people, and you may see it go a lot higher. So if they split the stock, probably would be very positive. So Google looks pretty good. Do you guys like any of the solar companies? Well, I was liking TSL at one time, but it kind of, as we used to say back in college, kind of blew chunkies on me here. I'm kind of breaking down. I don't know. There's the other one. Somebody mentioned, is it EQ? Is that a solar stock? Yeah, I don't know. First Solar, and I don't like that one. Spewer, as I call it, and I don't like that one.
Yeah, the whole industry group is one of the lowest ranked. It's been one of the lowest ranked. It's had a lot of headwinds thrown at it. While it remains down at this level, it doesn't really get my interest. I'm not looking to bottom fish. It's far more profitable to look for strength and leaders rather than trying to pick you know, the former leading industry groups that are no longer leading.
Yeah, and one thing about solar, I have a lot of engineering friends from Stanford who have started solar companies or gotten involved in solar, and the reason that they're getting into it is because of the government subsidies. And when I give them a bad time about that, the response I always get is that, well, the oil industry has been subsidized forever. And that's true, but do we need to subsidize another industry when it's not really in our best interests, or it's not as efficient as it needs to be? Solar is doing really well, and I have friends who are solar engineers, probably shoot me if they hear me saying this, but it's still not really there. It requires government subsidies, and I think the moves up were nice, and a lot of people did pretty well with those. And But they're having to work their way back. So these are starting to look better. You notice here's a pocket type pivot up through the 50-day, but I'd let them kind of work their way and see where they go from here.
Yeah, if the JS is viable, it'll form, it'll consolidate and form something more constructive than what I'm seeing right here. I mean, it's just sticking straight up. Now, it may work, but it's more of a fluke, and you want to keep the odds on your side all the time. Every time you place a trade, you want to make sure the odds are with you. So the odds are, I would get more interested in JKS if it were to form out more of a constructive basing pattern, then issue a pocket pivot. Then I'd probably be all over it.
Yeah. Okay, now let's get back. You saw me. Whoops! You saw me go to Intel a little while ago. Now, when Intel came out with their, oh, by the way, here's a question. Somebody says F5 is in trouble today. Is that telling you anything about earnings? F5 is not in trouble. If that's trouble, then I would prefer all my stocks to have that kind of trouble. But it's just pulling back and probably a little nervousness going into earnings on Thursday. So that, to me, that looks normal. It doesn't look like it's a big problem, but we're running short on time.
If the volume were to pick up here, the volume were to pick up into the close, that would make me take pause, and maybe I would then blow out the position or blow out half of it. But right now, right now it looks okay. I mean, it's not looking great, but it's not looking alarming at all.
Yeah, but let's also not forget that over the last 2 weeks, it's been up. It's up from 130 up to about 140 and change. So it's still up there. Now Intel, when they came out with earnings, they said that the big surprise in their earnings was due to cloud revenues. And so Altera, which is a stock I'm very familiar with, my good friend Nathan Sarkeesian, fellow Stanford graduate and fraternity brother, was a CFO of Altera until he retired about 4 or 5 years ago. And now he's just gardening these days. But Altera makes field programmable gate arrays, which are basically chips that can be programmed out in the field. Apparently, this is a big part of cloud computing, and so when Intel came out with their earnings, they shot out of there too. But you can notice it got very tight in here along the 50-day. Are you contemplating creating an indicator for pocket pivots? Well, pocket pivots themselves are an indicator. Let's see, JKS we went through, FTNT, Fortinet. These guys are, I guess, a security company, and they had a little pocket pivot here on Friday. It's very thin stock. Average is 346,000 shares a day, and I actually did a little trading on this but it's thin. It's hard to trade, but it looks good. It looks okay. Nothing really wrong with it. TIBX, somebody's asking about. TIBX, I was playing a little bit of this on this move up here, but it's kind of thin. It doesn't really feel right to me, so I dumped it. I don't know if it, this is probably a problem, a huge volume on the downside. So we got a lot here. I think what we're going to do is we're going to have another one of these in the next few days. So all of you should keep your eyes and ears peeled. Watch your inbox on the emails. It looks like we got about 350 or so attendees, and that's pretty good. So I'm glad to see that we didn't exceed our capacity. Our capacity for this is 500 people based on the GoToWebinar system capacity limits, which is good, but I think a lot of it's due to the fact that today's a work day. But I think what we'll be doing is doing some of these in the evening, doing some real time for those of you who like the real time thing. It's good for me because it keeps me distracted and from making stupid moves like selling stocks before I should be. So I think we'll be continuing with this, and you can look forward to more of these. Now, you can email us afterwards. Email us at info@virtuousselfishinvesting.com and give us suggestions on what you might like us to talk about, and we'll try and address that in the next one. But this is going to become a regular feature. I think it's very helpful for people. It's also helpful for me, I can say, in terms of having to put my thoughts about the market together cogently. Somebody asked real quick about Netflix. Netflix got the pocket pivot coming up to the 50-day. Looks okay. A little pullback today on light volume. Like I said, if everybody's bearish on Netflix and it's topped, I don't think it's going to happen when everybody knows it. So my guess is it probably take this thing higher one more time. But again, right now I'd use the 50-day moving average down at 182.83 as a guide for a stop. And on that note, I'm going to end the presentation. So we'll be back. There will be more of these. So if you didn't get a question in, or if you need more, if you were so excited about it, you just need more, kind of like market porn or something like that, I don't know, we'll be doing these again. Okay? So we'll see all of you later. And thanks for showing up. And we hope to meet some of you in New York when we're there on February 21st, presenting at the Marriott Marquis. All right, everybody, take care. Have a good trading day, and we'll catch you next week. All right, bye-bye.
Take care.